Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 749A, and today's date is August 24th, 2015, and the title of this episode is The Economic Carnage Felt Around the Globe Will Only Get Worse. Let's get right into the economic collapse financial news. Let's talk about what happened today and where we are headed. We understand that this entire system is collapsing at this time. And we saw the markets, at one point they were almost down 1,100 points. And then we saw the markets being pumped up again. But it really doesn't matter at this point, because what we're seeing is a complete collapse of the system. And as this system continually deteriorates and rip apart, it's going to get worse as time goes on. It's not going to get better. We will not see an improvement. I mean, will we see the market be pushed up and everyone believe that everything is okay? Yes, we might see that. But we know that this cannot hold. It will not be able to hold. It will fall apart. Because this market right now, it's not made by me, you, or you. It's made by the U.S. government central bankers. The whole thing is fake. The whole thing is propped up. This is why we are seeing all of this, the entire system, which is basically created by issuing debt, more and more debt to countries, and then stealing, of course, their natural resources. This entire system is based on the petrodollar system, which is falling apart. And if we look at the economic indicators like we've been looking at, we knew all this time leading up to this point that this was going to happen. Now, every day that I do this, it's not to say, oh, look at this, oh, look at this. It's to put everything together, to see it unfold in front of your eyes. So when they come out and say, oh, you know what? It was China's fault. Oh, you know what? It was North Korea's fault. Oh, you know what? It wasn't our fault. It was somebody else's fault. No, we know whose fault it was. Yes, it's easier to look back in history and say, oh, this is the way it unfolded. But while it's happening, it's very difficult to see it. A lot of people don't. A lot of people are sitting here going, how did this happen all of a sudden? One day we were fine. We're in a recovery. Unemployment came down to 5.3%. And all of a sudden today, or last Thursday, or last Wednesday, we saw a little ripple, got a little bit bigger. Friday was terrible. And now look on Monday. But we've been noticing that there have been more and more layoffs. I mean, look, for example, A&P notified that 3,781 workers will be laid off in New Jersey. Curian Capital is going to lay off 224. The Baltic Dry Index is dropping. It just dropped 26 points to 968. And this is what they use to calculate how the economy is doing, because this is the order of raw materials to be used with factories for manufacturing. And we know manufacturing is completely falling apart. We understand in the real estate market, do we really believe the real estate market is doing well? Because what we're seeing right now is the foreclosure starts in Florida. They're starting to rise in July. The research firm Reality Track reported last week that foreclosure starts increased 16% in July from the previous July. I saw an article in the Los Angeles CBS Local, which I found very humorous, that pending home sales are up, but a survey signals decline in real estate activity. Now, this survey that they took is they went around to realtors. This is the Market Pulse survey. And they asked realtors, what are they seeing out there? Well, they're saying that they saw a reduction in floor calls, listing appointments, open house traffic is way down compared with June. What they're saying is they are seeing that traffic is drying up. And this is just not in this area. And we have been reporting on this for quite a while. Prices are coming down. Traffic is drying up. The economy is coming to a screeching halt. Now, what's very interesting this morning is that the VIX basically was halted. For about 30 minutes, it did not update whatsoever. And this tells you how worried, how much the fear factor is in the market. And for a brief period this morning, anxiety got too high to measure in the U.S. options market. The Chicago Board Options Exchange Volatility Index failed to update for the 30 minutes after the open of the stock trading at 9:30 because everything was disjointed. Everything was moving too quickly. And we know they enacted Rule number 48, which allows them to shut down the markets. And the Fear and Greed Index went all the way to extreme fear. But what did we see? We saw the market drop. People were scared. The retail investor was scared getting out of the market. And then all of a sudden, out of nowhere, like a miracle, the market started to go up. Where did this come from? It was the Plunge Protection Team, PPT. All of a sudden, it kicked in, creating free money, giving it to the banks, and saying, buy, buy, buy. Make it look like people are buying to push the market up. And they did this all day long. Little by little, they pushed it up, but they could not continue to do it. The market started to slide around 1 o'clock or so and came down. And what we're seeing right now is exactly what Bill Holter told us. It was going to be a disaster. If you look around the world, in the Asian markets, in the European markets, a complete disaster. Deutsche Bank is out there and they're giving some reasons why the market is going lower. Poor S&P 500 sales and EPS growth. Plunge in commodity prices has taken another significant down leg. Subpar U.S. growth trends with weaker productivity and investment. 3.5+ years since the last correction. Now they're calling this a correction. And what's very interesting about all of this is that we saw this back in 1929 in August, where the market had a small correction. And everyone believed that everything was fine. Everyone believed it was all over. This was the correction we needed. And the market was pumped up again. It was going back up. And we know what happened in October. The whole thing came crashing down. We're seeing the same thing right now. What they were trying to do is they were trying to pump this up. Now, they might do this by the end of the week. They might be able to pump this right back up. People will say, okay, that was the correction. Well, this is the beginning. This is showing you what is coming and how bad it's going to get when this thing comes crumbling down. I mean, I saw on Market Watch, it says the American people, because of this market downturn, have lost $1.8 trillion. And of course, we already see that they're blaming this on China. Remember what I said, they need a scapegoat. They're looking for someone to blame. Because of China, this is why this is happening. But we know this is not why it's happening. What is really happening here? Well, it is the death of the petrodollar. There is a seismic shift that began late last year. It's the death of the petrodollar. And basically what's happening right now is that the petrodollar is pretty much dead. The world seems to have underestimated how structurally important collapsing crude prices are to global finance. For years, producers funneled their dollar proceeds into U.S. denominated assets, providing a perpetual source of liquidity, boosting the financial strength of the reserve currency, leading to even higher asset prices and even more U.S. dollar denominated purchases, and so forth in a virtuous loop that all came to an abrupt, if quiet, end last year. The flow of the petrodollar was set to dry up, And we're seeing that countries right now are stepping away from it. And the whole thing right now is a complete downturn in the emerging market currencies. Thanks to the conditions that resulted from the death of the petrodollar, the world's emerging markets were in no position to defend themselves against the fallout from the yuan devaluation. The big picture takeaway is that the world is now beginning to feel the impact of the petrodollar's quiet demise, and because this is only the beginning of this. Now, what was the main thrust away from the dollar? That's right, it was Russia and China and the BRIC nations. They started to trade not using the dollar. And we can see at this point in time that every country right now is saying, you know something, do we need to use the dollar anymore, the petrodollar? And at this point, they're saying, no, we don't. And we see China, Russia, Iran, other developing nations have transacted not using the dollar. Basically, the petrodollar, long serving as the U.S. leverage to encourage and facilitate the U.S. dollar recycling and steady reinvestment in U.S. denominated assets by the oil exporting nations, and thus means to steadily increase the nominal price of U.S. dollar price assets, just drove itself into irrelevance. Oil exporters are now pulling liquidity out of the financial markets rather than putting money in, which of course will be higher borrowing costs for governments, companies, and ultimately consumers as money becomes more scarce. This is what Bill Holter was talking about. The credit market drying up. Everything coming to a screeching halt. This is what we're seeing right now. And it's not because of China or Russia. The petrodollar system is dying. The United States government central bankers are losing control of the Middle East. Those countries that keep the petrodollar alive by selling it, by shipping it out using the dollar. And their goal is to get into Iran and Syria to keep the system alive, or any other country they can get into to use the dollar on their natural resources, and that is oil. And this is coming to a complete end right now. Emerging market currencies right now, they're withdrawing their money. People are scared and nervous. Now, Bill Holter wrote a letter, and he's pretty much saying it's over, folks. No matter how the week plays out, the credit bubble has been identified, recognized, and pricked. The equity markets are only a symptom. Do not be fooled by any strength this coming week. It should be used to raise cash. As September moves in, the September-October timeframe looks like a disaster. What may start out as a circuit breaker being hit now will ultimately be plugs yanked over the next couple of months. I believe a market closure is in our near-term future. Watch the various sovereign treasury prices and yields as a clue to which country is experiencing an attack du jour. The most likely U.S. Fed response will be quantitative easing, of course, QE4, or maybe they'll just rename it something else. The Fed will be forced again into further monetization, and the rate hike pretty much off the table at this point. How is this going to play out? We don't know for sure, but if we look at history, we can see that this is very, very similar to what happened in 1929. We saw the stock market during the summer months bobbing up and down, just like we saw. And then in August, it dropped, just like we're seeing right now. And I wouldn't be surprised if they pump it up to fool everyone, to make them think that everything is back to normal. But it's not going to be back to normal. It's not going to be business as usual, because we know what is about to happen. This system is crashing. This system is collapsing. And this is why you need to be prepared. You need food, water, cash on hand, gold and silver. I mean, Bill Holter is saying gold and silver will be your only lifeboats, as they are no one's liability in a world where everything, including the money in your pocket, is someone else's liability. And I agree. And for those people who have been prepping, continue to prep. Those people who are saying, should I, shouldn't I would start now. Because we've seen what's happened right now. We're coming into the home stretch here. If you don't have anything right now, you can speed up your preps by going to lifereliance.com. They have food, water, bug out bags, seeds, everything all ready to go. You can even customize it. But what you need to do is you need to prepare, to get ready for what is coming. Because do you really think it's going to get better? Think about what's happening right now. Let's just break this down for a second here. They're telling us that unemployment is at 5.3%, which means more people are working, more people are saving money. Which would then in turn mean that more people are going for mortgages to buy homes. We don't see more people going for mortgages. Actually, we see less people going for mortgages. Doesn't make sense. But we see housing sales, up to right now, was continually increasing. And then we looked closer at it, and we saw that these were cash sales by hedge funds and investment companies and foreign investors. So it wasn't the American people. We see retail sales last holiday season, Black Friday, Cyber Monday, was a complete disaster. The whole holiday season was a disaster, and there were stores basically closing during the most busiest time of the year. And right after that happened, there were hundreds and hundreds and hundreds of stores closing down. They're continually closing down. So retail is contracting. And this is with more people working. Doesn't make sense. They're telling us that go to college. Take out student loans. You're going to get a great job. But what we're seeing is more and more people going to college, and they put themselves into debt. They graduate college, and guess what? There are no jobs. And we see that there are about 6 million people that haven't made their payment within 360 days because that's the government threshold. If you look at 180 days, it's double that number. So now they're going to modify your payment on how much you're making. So if you're making $20,000 a year, yeah, you might have to pay $25. Remember, student loans can't be written off. The U.S. citizen, the U.S. person, cannot bail out the student loan bubble. It just can't be done. They were trying to do this, but it can't be done at this point. We saw the auto loan industry accept everyone who had a heartbeat to pump it up. Manufacturers were manufacturing like crazy, and they were channel stuffing the auto industry dealership lots to make it look like they're manufacturing. And then they were just giving the cars away to make it look like they had sales. And they accepted anybody that walked through the door. And we see most of the cars that were purchased were from the government, not even by the people. So when we put all of this together, we have 90 plus million people out of work. Those people who are working, who found a job, it's a part-time job. The youth of America is not working, or they have a part-time job and they're making no money whatsoever. This system right now is in a downward trajectory. There's no other place to go but down. I mean, we even see the government right now giving away billions in grants to students who never graduated. I mean, it's just insane what is going on right now. The U.S. government gave out some $16 billion in loans to students attending colleges that graduated fewer than a third of their students after 6 years. I mean, we are seeing a complete destruction of the entire economy, a collapse of the system. And of course, what they're going to do, and they're going to turn around and say, it was your fault. because this is what a fascistic society does. Profits go to the elite, the losses go to the people. And they're going to blame the people for it. And they're going to have to say, okay, since you're to blame, we need to take your money from the banks. We just so happen to have these bail-in documents. The banks will be shut down. Capital controls will be in effect. This is coming very soon. This is the tip of the iceberg, people. We are headed down a path right now, and the path leads to collapse. That's it. Nothing else. And this is why you need to continue to be prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.